Yesterday we saw Donald Trump inaugurated as the 47th president of the United States, and he does hold quite a number of stocks in his own portfolio. We're not going to run through his cryptocurrency, but as you can see, he does hold around $11 million worth, and do note this is as accurate at the beginning of the year, and given that the industry is very volatile, a lot of these numbers could have changed both in price as well as value. What we want to focus on today are the 8 stocks that he does hold, and we are going to be going through each one of these on the highest valuation down to the lowest. So the first one, maybe no surprises, is Trump Media and Technology Group. Now the ticker symbol is DJT, and for those that don't know, it is a media company focusing on prioritizing free speech and is the parent company of the social media platform Truth Social, probably something you are aware of and something that he did create after he was kicked off both Facebook and Twitter back in 2021. Now he does hold around 53% of the company, and right now his position does sit at just under $4 billion, but this is a company that is very volatile given the market cap, and we can in fact see just today alone it is down around 12%. Over the last year, down around 30%, trading at the lower end of the 52-week range, seeking alpha themselves give this a sell rating, and on an earnings per share basis, it is negative 2.5. And what we do want to show you, just based on their most recent income statement, so we are talking December 2023, they reported around $4 million on their top line, but we can in fact note their bottom line net income is negative $58 million, and therefore they haven't turned a profit in the most recent year. Based on the trailing 12 month alone, it does look like 2024 is going to be a year of a massive loss of $372 million. Now typically we're going to look at each one of these companies and give you our own valuation, but we are going to exclude this company today. Moving on to the stock that he owns the second largest amount, it is Apple. In fact, he holds more than $500,000 worth of these shares, and if we look at the company itself, it is down today nearly 4%, although over the last year up 21%. It is trading in the mid to upper end of the 52-week range, with Wall Street giving this a buy. Whilst it does pay a dividend on the lower end of 0.43%, and very interesting to note, and some reason maybe for the drop we have seen today, but Nancy Pelosi, as we did cover in yesterday's episode, did recently announce that she sold shares of this company. We are talking 31,600 to be precise, which sits around $5 to $25 million. And as we just showed you, shares are now down on this company. Now, she isn't the only one to have started to sell. We have seen in 2024 a few times over the quarters that Warren Buffett himself was continuing to sell down his Apple stake. So very interesting to note that actually maybe Nancy Pelosi's sales has a larger effect on the share price than Warren Buffett. Now, we are going to take a very quick look, but our intrinsic value for this company does come to around $215. Now, this is derived from the DCF model, which as you can see here, we have the free cash flow year on year, average growth around 7%. We've gone 10% moving forwards. Based on the discount rate, we get the present value of future free cash flows and terminal value, add together with the cash, subtract total debt, get to the equity value, divide by the shares outstanding, and as you can see, 215, indicating downside of 3%. Now, these numbers are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Apple or any others. But for full transparency, we'll show you at the 8% rate, intrinsically 186, meaning downside of 16%. And for those that are a lot more bullish, at 12%, 249, upside of 12. Now, we are going to take through the medium rate today for Apple at 10%, where we don't stop there. Typically, we do add a margin of safety, but right now, what this is telling us, given the price is above the intrinsic value, we believe that Apple is trading at a premium. Now, for those that want to see at a margin of safety of 10%, which is where we typically start on the channel, and we execute if it meets the 3 golden criteria, the wide moat, the strong financial metrics, and the good forward-looking data, we would say a buy at 194, and then you can keep going depending on what margin of safety you do want for your company. But as we have noted, right now trading at a premium, and even though Wall Street do give this a buy rating, we can see they anticipate a $246 price target by the end of the year, translating to 11% upside. And as always, give us your thoughts as we go along below. The third largest company in his portfolio is Microsoft. As we can see, he reportedly owns more than $500,000 worth of shares of the company, and this is one that Wall Street actually indicates should be a strong buy. Whilst it does pay a yield of 0.77%, we notice over the last year it is up only 10%, but this one over the longer term has had a lot of share price growth, up 808%, massively outperforming the S&P right now, and as we can see, it does trade around the midpoint of the 52-week range. Now, in terms of our thoughts on the valuation, our intrinsic value comes to $494, and you can see we've used a growth rate of 16%. For those that believe other rates are more appropriate, you can see the different upsides attributable to each different growth rate. Now, as we do apply a margin of safety, we can see, unlike Apple, we are getting 10% at 445, at 15%, not quite there yet. So for this big company, 10 to 15% MOS with Wall Street and their strong buy, anticipating around $506 over the next year, translating to 18% upside. Now, we also want to let you know we have released our latest free weekly article. We drop one every single Monday morning to your inbox for free, where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up, read straight away, where you'll also be able to gain access to 46 undervalued stocks for the month of January. Lots of information for each one, the upside that Wall Street themselves see over the next year, and you can grab a recently released copy of 43 stocks that Wall Street themselves believe have the most upside right now in the S&P 500. So click below, you can sign up and read straight away. We then move on to the AI giant NVDA, where again, similarly, he does own around $500,000 worth of shares, and we can in fact see this is one with a strong performance, triple-digit return over the last year. Over the last 10 years, up more than 26,000%, massively outperforming the S&P. Another company trading towards the upper end of the 52-week range, a strong buy rating from Wall Street as well. And when we do run it through our own calculations, our intrinsic value of $179, not far off Wall Street, who see 178. Again, this translates to 29% upside. If we just take a look at the rate we have used, it is 25%. Granted, over the last 5 years, free cash flow has grown 135% year on year. Over the last 10 years, 94%. And with that medium 25% rate, that does translate to 30% upside. Now, if we were to take a look at the margin of safety, as we keep going today, we can in fact see you are getting at least 20%. In fact, at 25, you would need to wait for $135. So NVIDIA between 20 to 25%, with Wall Street very bullish, another strong buy indicating 29% upside. We then move on to the next stock, which is Amazon. In fact, he does own a smaller amount than the companies we have just gone through, but it is at least higher than $250,000. If we take a look, up 48% over the last year, another one that has massively outperformed the S&P, another company trading at its 52-week highs with another strong buy rating from Wall Street. Now, in terms of our own valuation process, our intrinsic value, $253, pretty much around where Wall Street see this over the next year. Not massive amount of upside, only around 11%. And bear in mind, we have used the 20% growth rate. And if you do look at the other rates, for example, if you're very bullish on this company, one that is growing their free cash flows rapidly at 30%, this would indicate a double from the current price. So when we do look at the margin of safety today, you are pretty much getting a 10% up to around $227, $228 where it currently sits. Maybe that is sufficient for you, maybe you want a bit more, and we can briefly show you at 15% around 215 and at 20% around 202. But today, Amazon 10% margin of safety, 11% upside. The next one is Alphabet, and one that he does hold a fair amount, around the same value of Amazon itself. And we can see this is a company up 41% over the last year and up just 2% on the day, something that maybe you can attribute to Nancy Pelosi, who, as we said, did release some of her buys as well as sells. She did buy around $250,000 to $500,000 worth, and as we have said, we have covered this in just a video yesterday. We also noticed over the last 10 years, massive outperformance of the S&P, again trading at the upper end of the 52-week range, like NVIDIA, like Amazon, as we just saw. A double buy from both Seeking Alpha as well as Wall Street, and one that also pays a dividend, but on the lower end of 0.41%. If you look at the intrinsic value of $215, we have gone for a 12% medium rate, but you could argue, given the average over the last 10 years has been 24, that 14% may be reasonable. That does in turn indicate 24% upside. However, based on our 12%, when we do run it through the margin of safety, it isn't at a 10% level just yet. So for Alphabet, which was not too long ago trading far lower than the current price, you're getting somewhere for 5 to 10%, with Wall Street themselves indicating 30% upside, their price target end of 2025 at $225. The second to last company we have is Berkshire Hathaway. Now, he does hold some of this company around $100,000, although slightly higher, so that it is less than the previous companies we have gone through. And when we take a look at Berkshire themselves, they're up 28% over the last year. Over the last 10 years, marginal outperformance of the S&P up 216%, again trading at the upper end of the 52-week range with a strong buy rating from Quant and a buy from Wall Street. And we do also want to point out that they don't currently pay a dividend. Now, given the makeup of this company, it is slightly difficult to run it through the valuation, but if you want a deeper dive, given we haven't done one in quite some time for Berkshire Hathaway, do drop your comments below and we can take a look. Now, that does lead us on to the last company that he does hold more than $100,000 worth, and that is Broadcom, another AI giant alongside NVDA. And when we take a look over the last year, triple-digit return over the last 10 years, massive outperformance of the S&P up 2,154%, and following the trend of the other companies near the 52-week high with a strong buy rating from Wall Street. We can also see they pay a dividend of around 1%, and actually one that does increase the dividend at a historically double-digit rate. Finally, if we jump into the valuation, we get to $228, and as you can see, we've gone for the 20% growth rate. Given over the last 10 years, it's up 48% year on year. You could look at 25%, which would give 35%. And remember, you can click on the pinned comment below and grab a copy and run your own numbers, whether it's for Broadcom or any others. So similar to Apple, we don't have a margin of safety, but for those that want to see 10% a buy at 205, at 15% around 194, and at 20% around 182. In terms of Wall Street though, they did give the strong buy rating, although they only see this at $265 at the end of the year, which does translate to 10% upside. As always though, do give us your thoughts in the comments below, whether you're actually adding to any of these, maybe you hold similar companies, or for whatever reason you do believe they will pull back, given the majority do sit near their 52-week high. Don't forget as always to click on the pinned comment below, sign up to the free weekly newsletter and grab those spreadsheets, and also come and join us in the Patreon where we do cover our weekly buys and sells. As always, have a great day and we'll see you all on the next one.